What's going on, guys? Welcome back to the channel. In today's video, it's going to be a little bit different. I'm going to be going through exactly how I read the charts every day and what I'm looking for each week when it comes to trading SPY, trading futures, and just pretty much the entire strategy that I trade. So the first thing that you have to do, obviously, is find a platform. This is Thinkorswim. I think it's the best one to use. But we are going to be looking at option charts for a majority of the time, and then also I do use the regular chart and I use fib levels off of it. So there are a couple different charts that I do look at. So the regular chart with fibs, and then also I look at Friday contracts for SPY, and then also 0DT contracts for SPY, and then also monthly contracts. But those ones are used very very few times, but it's a good reference kind of to see where the market could reverse at if we have like a bigger like rip or a bigger sell-off. So the first thing that you want to do every week at the open on Monday is find where SPY opens at, because that is how you get the certain strike price for the option contracts. You don't just pick random ones for 0DTs, for the Fridays, for the monthlies. It's all based on where SPY opens at. So this week, where did SPY open up? SPY opened up on Monday at 689.42, and that you'd round to the nearest dollar for the 0DT contract. So 689.42 rounds to 689, and then you add one for the calls, that'd be 690 calls, and then subtract one for the puts from 689, that'd be 688 puts. So that's how you get the 0DT contracts. I'm going to show you, what I mean by the 0DT contracts and how we look at those, but this is just for picking the strike price of all these different contracts. So that's how you get the 0DT contracts. You round to the nearest dollar based on where SPY opens at on Monday, or actually every day, because they're 0DT contracts. You're going to be picking these every single day. You're going to be picking new ones every single day for those 0DTs because they expire at the end of the day. And the Friday contracts, you only pick on Monday and on Friday, and in between Monday and Friday, you use the Mondays from Monday to Thursday, and then on Friday, you repick the contracts for that day only, and then on Monday, you repick and go through the process again. So the Friday contracts, you may only, when you repick on Friday, you may only use them for Friday, and then we get new ones on Monday, or sometimes the ones we use on Friday will be the same ones we use on Monday. So and then for the Friday contracts, you round to the nearest fifth dollar. So 689.42 rounds to, again, 690, or no, not again, but that would round to 690, and then you add 5, so it'd be 695 calls, subtract 5 for the puts, 685 puts, and that's how you get those contracts. And then the monthlies would be the same as the Fridays, but you only update these every Monday. You don't pick them again on Friday. So that's pretty much how you go about picking the contracts. And then obviously on Friday, the ones that I'm going to have pulled up, these are the 695 calls for these are actually the 0DT contracts, but if we look here, these are going to be 685 calls and the 675 puts, because we obviously had a trading day on Friday. So you repick on Friday. So on Friday, we end up opening up at 681.69, so that rounds to 680. Add 5 for the calls, that's the 685 calls, minus 5 for the puts, that'd be the 675 puts. So that's how you go about picking them, on each day of the week. For the Fridays, your DT charts, and so once you have these contracts pulled up, you're gonna want to start off on the 685 calls, because, or the weeklies, I mean, the 30-minute chart on the Friday contracts. This is where you will be getting pretty much your bias going into the day. So if we look here, this is the call side. This really doesn't tell us much, because what we are looking for is the SMAs, 10 and the 50 SMA, to be crossed. So we have the 10 and the 50 SMA on these charts, and these are Heikin-Ashi candles. That's pretty much the setup and the layout for these charts. Again, you want to have the 10, 50 SMA, Heikin-Ashi candles, and also have extended hours off, because this is important when it comes to SPY, because SPY trades, I think, for an extra 15 minutes than like regular stocks do. They're open until 4:15, so you want these to be off, because that last 15 minutes is not what we want to have on these charts. It'll skew the SMAs and make them look different. So make sure you have extended hours off. But yeah, pretty much if we are crossed on the 30-minute chart on the Friday contracts, that means we have trend in the market. So if the 30 minutes cross on the call side, we're bullish. If we're crossed on the puts, we're bearish. And if we are not crossed on either, then we are neutral. So By cross, I mean the 10 SMA has to be above this 50, with the 50 being flat or curling up. So obviously on the call side, we don't have that. If we flip to the put side now, this is actually the wrong chart, 675 puts. You could see that on Friday we actually were cross here bearish, and we are actually crossed on Thursday as well. So you can kind of see what happened when we got that cross on Thursday. We saw, a cross, it kind of pulled back a little bit, and then we got another leg down here into Friday. And the reason behind that was because this 30-minute chart crossed on Thursday. We saw, a little bit of a dip, and then we saw another leg down on Friday open. So when this chart is crossed, okay, we are focused on the downside. Our trade setups we want to be looking for are going to be to the downside, and that's our bias. So on Friday, I actually ended up buying this dip to the 50 SMA because this chart, this 50 SMA, is your massive support on the put side. Because if we don't end up holding this 50, okay, most likely this is going to go cross negative and we lose the trend. So every dip to this 50 is pretty much a buying opportunity. You don't have to, buy this every time. I don't buy it every time, but this was a trade I did end up taking on Friday. All we did was buy this dip to the 50 because it's your major support. This is your first time that we actually ended up pulling back to the 50, so it's a good opportunity to grab some puts. I did take this, and we were up 60% at the close on Friday. And that's one of the setups you could take just based on this 30-minute chart. A lot of times I don't really trade based on the 30-minute chart. I kind of look for a 0DT chart entry. So if we look now at the 0DT contracts, it's kind of the same thing. So on the 0DT contracts, 5-minute time frame for these, you don't want to be looking at any other time frame, only the 5 minutes. So on the call side, we're not interested in taking anything on the calls because we're cross bearish on the 30-minute. Any call cross isn't really one that I'm looking for to take. It's not high probability of playing out because we are looking for trades to the downside. So honestly, let's see, what time was this at? This was at 1:10. So honestly, right here you could have actually taken a negative cross. This is a trade opportunity. It's honestly a trade that I don't take that often. I'm more focused on the positive crosses where the 10 goes above the 50 and the 50 curls. When it goes below the 50 and the 50 turns down, that's another opportunity. But it's kind of one I've been staying away from recently. Just haven't been, it's not a trade that I absolutely love because sometimes we'll kind of chop around when we're crossing negative, or it'll just be very funky, not clean movement. So yes, this could have been an opportunity, but was it one that I took? No, because I was already in from the 50 SMA on the 30 minutes. So call side really doesn't give you much on Friday. Only thing was this negative cross that happened that kind of gave you, a sense of, okay, we're probably going to see some continuation down. But if we flip to the puts now, on Friday, you guys can see there really wasn't much going on either. I mean, we got this cross late in the day, and these are ones I like to stay away from. Crosses when we're past 3 o'clock aren't ones I want to be taking. Why? Because the 30-minute, or not the 30-minute, the 0DT contracts have theta, and they are expiring at the end of the day. When we get closer to the end of the day, they are a lot more volatile, and the crosses just do not end up playing out as often as they do during the day before 3, because the theta isn't absolutely juiced on them, and they're not flying around like crazy. So if it's past 3 o'clock, do not take a cross. They're just not, it's just not a good setup you want to be taking. But if this was during the day, this 100% would be a trade you want to be taking. This is an A+ setup to take if this was before 3 o'clock. So reason behind that is because 1, 30-minute trend is bearish, and then 2, if we are getting a 0DT cross in line with the 30-minute trend, that's pretty much your A+ setup, because we have the higher time frame trend and then we have the intraday trend flipping. So that would be an A+ setup to take if this happened before 3 o'clock. You want to see the 10 SMA go above the 50 with the 50 curling up. You don't want it to be sloped down. Now this cross, my chart's messing up, but this cross, it did kind of look like this 50 was, sloped down a little bit. So honest, oh my God, this chart, man, I don't know what is wrong with my mouse, but I just cannot zoom in on this the right way. So yeah, we have the 10 going above the 50. 50 definitely looks a little weird, I'm not gonna lie, because it's it pointed up, pointed back down, and it pointed up back again. So again, that's another thing with the end of the day movement, could be very funky with SMAs. So let's just say 10 SMA goes above the 50, 50 is crawling up. Okay, that's the trade you want to be taking. It's a really good setup. We have the 30-minute trend in line with that, and then with the intraday trend flipping. So that's kind of your A+ setup you want to be looking for when it comes to the Friday contracts and then the 0DT contracts. You use the Friday contracts to tell you how to trade the 0DT contracts. So, in this scenario, you want to be focusing on the downside. Okay, it's very simple. Look for a put cross. If we're trending bullish, it's the opposite. You look for a call cross. And if we're neutral, this is the neutral market is the one you kind of want to be staying away from or sizing down in, because those are the times where the market could be chopping around and where we may not get as good of price action. So for me, when we're neutral, I'm sizing down. That's just how you want to go about it. You want to be sizing up when we have trend in the market and where things are a lot clearer and where the probabilities are much more in your favor. So yeah, that's how you kind of go about looking for those A+ setups. And that's kind of just a very basic outline of how to trade these option charts and how I trade them. I'm going to take a step further here, and it's going to be probably a little bit more confusing, but this is kind of the next step when it comes to trading these charts. So if we look here, we're going to go back to the Friday contracts. And now when it comes to the Friday contracts, it's like, okay, once we have trend, how far could this trend last, and how do we know, or how can we tell when there's a chance, okay, we're probably going to reverse? So this is where the higher time frames come into play. So 30-minute chart is your time frame that tells you the trend in the market. When we get that cross on the 30-minute, okay, now we look at the higher time frames to see what the 50s look like over there. So when we look here on the hourly, this really doesn't tell me too much. I mean, we got this little cross, 50s turned down, doesn't tell me much, and this 50 SMA was also pretty flat. So the flatter the 50 is when we go test it, the more likely it's going to break when it's sloped down a lot more. So if we go back and, okay, there's really not a 50 that's super sloped down, so it's not really a good example, but when it's sloped down more, it's going to be stronger resistance. Okay, we're going to go to the 2 hour now. So, okay, again, we're at this 2 hour 50. This is, yeah, again, it's not sloped down too aggressively. When we look back here, see, like right here, this is sloped down quite a bit. This would be like a stronger area of resistance. You can see how much more it's sloped down its way, more aggressive. And then as we come down into here, even down in here, it's sloped down a bit. And then eventually kind of like flattens out. When it flattens out like this is where it's less of a resistance. So, until we come into a 50 that is sloped down quite a bit, that's kind of how far you could expect the trend to go until. Sometimes we'll reject at the 1 hour, 2 hour, sometimes we'll go to the 4 hour, sometimes we'll go to the daily. So if we look here, now let's go to the 4 hour. Okay, now this 4 hour is definitely sloped down a lot more. We did prop above it up in here. I don't necessarily take trades directly off of these 50 SMAs like intraday. If you're taking a trade off of these higher time frame 50 SMAs, then you want to be taking options and you want to be buying some time. I'd say go at least like a week out expiration. I'd say, yeah, 7 days is probably like the sweet spot. If you want to go a little bit closer expiration, you can, but I really wouldn't go 1 or 2 days out. I'd look for more than that, like 3 to 7. So yeah, on Friday we did end up rejecting that 50 SMA right off of pretty much the open, and yeah, we saw some sort of rejection off of that. And also if we look on the daily, I mean, we're right back at this daily 50 as well. So, you guys can kind of see, like, when we get these 50 SMAs that are sloped down quite a bit, this is where you could expect a reversal to happen. Eventually, though, sometimes the 4 hour chart will eventually cross, and the daily chart could eventually cross. But I'd say like 90% of the time, the daily 4 hour are going to mark the bottom. Like a lot of times, very often, this is where we end up bottoming at. Just because these are such high time frame 50 SMAs in such high time frame areas that 90% of the time this is where the trend ends up getting ended, where we go back neutral, we see a bounce, 30-minute goes negative. This is just where it happens at 4 hour 50, daily 50. That's your pretty much big spots you want to be watching in. The only thing I don't like about this, I guess, test of it is if you see how many times we've came up into this level, like 1, 2, this is the third time in the last week or so since the 13th. Is this the 13th? No. What day is this? I don't even know what day this is. It doesn't tell me, but you can see, I mean, we've came up to this multiple times. Eventually this side is going to break. We've came up, this is like pretty much the third time. I mean, I guess you could say second time on the daily that we came up into this area. And if we do see a move lower, like next week, Tuesday, if we do go lower, I mean, I really would expect this 4 hour 50 to break and cross at some point. Same thing with the daily. Daily is down aggressively though. It would need a pretty significant move to get back above that. But this is just kind of how I analyze these charts. It's like, okay, if we remain below these 50s, okay, favor the upside. If we get above these 50s, most likely, okay, we're going to see a move lower. And that's just kind of how I go about looking at these higher time frames. It's not necessarily I'm taking a trade off of these every single time. They kind of just give you more of a sense of like, where are we going next? Like, what are the probabilities, pushing us towards? And right now, probabilities definitely say higher. I mean, for now, we rejected that 4 hour, and we got a solid rejection off of that level. And also the daily, pretty much got a rejection off that 50. And if we remain below here, okay, we go higher. If we break above, we go lower. When it comes to actual setups, if you want to, you could buy those 4 hour 50s rejects as long as that 4 hour is sloped down. It has to be sloped down. If it's flat, I would not recommend buying that dip. You can see back in here, we end up getting a cross. We didn't obviously have these 675 puts when this cross ended up happening, but it's just an example. When we get a cross in the 4 hour, okay, you could expect continuation down. I think this was there CPI at this time. I don't know. That's a very odd candle, but you can see we get a cross and we see a little pullback, hit the 50, continuation lower. That's kind of what will happen if we do end up crossing on the 4 hour. But I'm kind of rambling on these higher time frames, but that's how I use them. They pretty much tell you how far the trend could go. Look for the ones that are sloping down, where that 50 slope down. When we have flatter 50 SMAs, okay, more likely to break. Your strongest ones are going to be that 4 hour and daily time frame. That's where you can expect really solid rejections at. 1 hour, 2 hour are less strong of areas just because it's a smaller time frame, but 2 hour does get some solid rejections if it's sloped down hard. So it really all depends on how it's sloped down. That's how you go about doing it. So like right now, we got a solid bounce off that 50. For now, it's kind of like I really don't know if we're going to get the continuation move lower, because we already got this bounce off the 50 and we're sitting at these higher time frame 50 SMA. So again, we're going to have to see how we open up next week. But for trade ideas, it's like if this 30-minute chart loses the 50 on Tuesday, if we whatever contracts we have, if we lose this 50, okay, we're gonna go higher and we're gonna be looking for a 0DT call cross. If we end up holding this 50, look for your put cross. It's that simple. It's pretty much you have a plan for both sides of the market, and this is how you go about doing it. Like every day I don't know exactly where we're gonna go. I pretty much just read what is currently happening on these 30-minute charts, and it pretty much tells me what I want to be looking for next. So right now, okay, we're crossed on the 30-minute. Look for a put cross on Tuesday. If we end up opening very green, we get a nice green open and we lose the 50, okay, look for your call cross. It's that simple. So that's pretty much how I go about looking at the 30-minute higher time frames. Higher time frames could be a little bit confusing because you don't really know where we're gonna reject at, but it's all about the higher time frame. Like if we look like that 4 hour daily, I'm telling you, super important. You want to be watching that, and how sloped down the 50 is. That's very important. The more sloped down it is, the stronger of an area it is. You don't want to be shorting or like playing a rejection on those higher time frames and it's flat. Like I rarely ever take even like a 1 hour, 2 hour rejection play. I really don't, unless it lines up with some other confluence that I'm going to go over next, which is going to be fib levels. So this is kind of like a brief video of like everything in one and how I play it. Like this isn't really so in depth. I don't have a million examples to show you guys. I have all that in my Discord, but there's kind of a brief rundown on what I'm looking for and how I have my bias for the day. This 30-minute chart is pretty much my bias. So yeah, that's kind of the rundown on the 30-minute, higher time frames on the Friday contracts, and how we kind of use the 0DT chart. Like we're pretty much, the 0DT chart is very simple. All you're doing is looking at the 30-minute, okay, what's it telling us to do? And then whatever your bias is based on that, look for that 5-minute cross on either the calls or the puts, depending on whatever that bias is. So yeah, next up, we're going to the fibs. This is going to get probably confusing for you guys, but this is how I trade and how I do it. So this is what we have for our fib levels. We use these on ES. It doesn't matter what you trade. ES is the futures contract of pretty much the S&P 500. So it doesn't matter if you trade options, futures, it doesn't matter. You could pick whatever you want to trade. I know this is the futures chart, but you could still trade options. Instead of buying futures, you literally all you do is buy SPY calls or puts, depending on whatever the fib levels tell you. So this is like the third part, or the third main part to this, because we have the 0DT contracts, we have the Friday contracts, and we have the futures chart here with the fibs. So pretty much these are just major pivots on ES, and how do we get these levels? So this is where it confuses like pretty much everyone when I talk about the fibs. But so we have the 0% mark, which is the top, 100% mark, which is the bottom right now. And the reason these levels are what they are is because this 30-minute high right here was what? This was the last swing high of the last bull trend we had. So if we pull up the 30-minute chart on the calls, we were originally crossed up in here. This chart looks very weird because we obviously didn't have these contracts earlier in the week because we had contracts that we picked on Monday and we used them from Monday to Thursday. So on Friday we had new contracts. This just looks a little bit funky, but this is the premise of what it is. So 10 SMA crosses the 50 here on the 685 calls. That's kind of irrelevant. I don't know why I said that, but we crossed bullish, okay, and we eventually went negative here. This 10 SMA went below the 50. So at that point, we are losing the trend and we're going neutral, okay? So this pivot here, this high that we made, that's the last swing high from the last bull trend we had, and that is exactly where this high on ES was from. This is the last high we made during the last bull trend we had. So that's your upper pivot. And can you guess what the bottom pivot is here at 100? It's your last swing low of the previous bull or bear trend we had. That's not the one we have right now because we still are trending bearish. This is the previous trend we've had. So I know we're currently bearish right now, but this is from the trend we built last bear trend we had. So now when we go and cross negative on the current bear trend we had, this is going to be your new swing low because if we lose the trend, okay, that's where we end up changing this pivot to this pivot. This low is going to be your new low pivot, and we're going to keep this high pivot up in here. So it's your last two swing highs from the previous trend we've had. So as soon as we cross negative from one trend to neutral, you wait for a break of the range, and then you end up moving this pivot. So this is going to be your new low pivot. And this is going to get even more confusing because you guys if you're new to this, you're not going to really know what I'm talking about. But if you're in the Discord, you guys probably already know because this is what I'm talking about pretty much every day. And in recent videos, this is what I've been going over. But pretty much this 100% down here is going to go up here to this level, and 0% goes down to this new low. So every time when we are going from bearish to neutral, the 100% is going to be at the top, 0% is going to be at the bottom. Whenever we are going from bullish to neutral, then the 0% is going to be at the top, and 100% is going to be at the bottom. So that's kind of the way you want to be thinking about it. So and again, once we cross neutral, when that 10 SMA crosses below the 50, you have to wait before you change the fibs. You have to wait until we break out of the range we are currently in. So let's say on Monday, all right, we end up losing that 30-minute 50. Most likely, okay, where are we going to be? We're probably going to be between the 68.80 and the 69.30 level because this is where we end up, bouncing off that 30-minute 50. So most likely if we cross negative on the 30-minute, we're going to be above this level. So we're going to be in a range. The range obviously is 69.30, 68.80 because those are the two fibs we're between wherever we cross negative. So wherever we cross negative is the range we are going to be in, and what you do from there is wait for a break of the range, like I said. So what does that mean? If we get a 30-minute candle closure below this level and we go at least 10 points below the level, that is a break of the range. If we end up breaking above 69.30 with the 30-minute closure above and at least 10 points above, that is a break higher. And the only way we change the fibs is if we break higher, because if we break lower, that pretty much just says, okay, the bears or the bulls aren't able to take this higher. Bears are remaining in with the trend, so they're just going to take this right back. So you don't change the levels if we break back under that 68.80. If we break above this, okay, we change the fibs. So what does that mean? We end up changing this low to this low. Your new bottom pivot is this recent low of the bear trend, and you flip the 100% and the 0 mark. So 30 minutes cross bearish on the Friday contracts, 5 minutes already cross on the 0DT puts. What would be a trade to look for? So for example, let's say the 0DT puts were crossed here right off of open on Friday, and we end up getting a pullback to this fib level up in here, 61.8. That would be a short you would want to take. So let's just say this fib level right up in here, 61.8, and this 68.81 level. If we pulled back up in here while the 5-minute is crossed on puts, and maybe this lines up with the 0DT50. So if this lines up with the 0DT50 and we're crossing the 30-minute on the Fridays and we're at the fib level, that's a short you could take because we have pretty much all confluences together. We have a fib level, we have a 5-minute 50, and we're crossing the 30-minute. So that's pretty much A+ trade if that was the scenario. So that's how you use the fibs. I mean, it's very simple. You use the 0DT chart in confluence with the 30-minute and confluence with the fib levels. So if we are at some sort of key spot on the 30-minute or key spot on the 5-minute and we line up with the fib level and our bias is still to the downside and we're bearish and we come up and test a fib level, that would be your entry to short. So that's kind of how you would go about using the fib levels. Again, probably very confusing when it comes to these levels because you don't really understand every single you don't understand every single part to it, which I'm going to make a video on, but that's kind of how I go about trading these charts every day. That's a lot of information probably in this video, and there's a lot more that you could pick up on with the fibs and even the 0DT chart, but that's kind of the premise of the strategy and how I go about reading these every day. But yeah, first thing you want to do though is master the option charts because going all in with all these different things, it's gonna be very confusing. So what you want to do, master the 30-minute on the Fridays, master the 5-minute on the 0DTs, and master like the higher time frames and get all the option contract stuff down, then go to the fibs, because if you try and do everything at once, you're gonna have too much information. You're not gonna know what's going on. So that's kind of what I would recommend. But that's pretty much how I go about reading the charts every single day and every single week. So if you guys enjoyed, drop a sub. If you guys have any questions, drop a comment, join the Discord, drop a message or something like that. But yeah, I'm telling you, it's a really good way to read the market, and there's a lot of good setups that form off of these charts. So if you guys enjoyed, drop a sub. I'll video up tomorrow recapping the trades from Friday. But yeah, that's all I got. I'm out. Peace.